Okay, so before I start, full disclosure, I am currently short Nvidia from a little over 200 bucks, so this video is completely self-serving. I am absolutely talking my own book here, and there's a very real chance Jensen Huang personally rips my friggin' face off and sends this stock to another 50% higher from here. So with that out of the way, let's talk about the bearish case for Nvidia, because if you spend any amount of time on finance Twitter or X Twitter or whatever the fuck it's called, you'd think Nvidia has already won AI forever, and there's basically no scenario where things go wrong. And that's exactly what makes me a little nervous. Not the company, but the expectations, because Nvidia isn't being valued like a great company anymore. It's being valued like a company that's going to dominate one of the largest technology revolutions in human history without ever hitting any speed bumps. And that's a pretty high bar. Now, before the comment section explodes, let's acknowledge reality. Nvidia is an incredible company. Jensen is incredible. The products are incredible. The execution has been incredible. This isn't a quality argument. It's a valuations and expectations argument, because eventually every growth story runs into the same problem. The numbers just get too big. At some point, you stop asking whether revenue can grow and you start asking whether revenue can continue growing fast enough to justify the expectations. And that's where things can get interesting, because when Nvidia was doing 20 billion or 30 billion dollars in annual revenue, doubling the business was one thing. When you're doing well over 100 billion dollars, the math gets a lot harder. Every year requires another massive amount of spending from customers. And that's where I think investors should at least pay a little attention here, because almost every major AI buyer today is spending so aggressively. Microsoft, Amazon, Meta, Google, everyone is building to build AI infrastructure. But what happens if that spending slows? Not stop, just slows a little bit, because Nvidia's valuation doesn't really need bad news to get heard. It just needs slightly less good news, and that's a very different risk. The second issue is competition. Now, every time someone mentions competition, Nvidia bulls immediately laugh, and honestly, they've earned that right so far. But history says that eventually every dominant technology company faces pressure. AMD is not going away. Custom chips aren't going away. Google has TPUs, Amazon has Trainium, Microsoft is investing heavily in alternatives, and every hyperscaler on earth would love to reduce their dependence on Nvidia if they could. Now, maybe none of those efforts work. That's absolutely possible, but the assumption that nobody ever catches up is usually where investors get into trouble. The third concern is something almost nobody wants to discuss. What if AI becomes less compute intensive over time? The entire NVIDIA bull case basically assumes we need exponentially more compute forever. Maybe we do, maybe that's true, but technology has a funny habit of becoming more efficient. Models get smaller, inference gets cheaper, architecture improves, and if that happens faster than expected, the demand curve could look very different than what investors are modeling out today. Then there's the sentiment risk, and honestly, this might be the biggest one. Nvidia has become the consensus trade. Everybody owns it. Retail owns it. Institutions own it. Momentum funds own it. Your Uber driver and your mother probably own it. And when everyone agrees on something, expectations become incredibly difficult to exceed. Again, that's not a company problem. That's an investor psychology problem. Now, could I be wrong? Abso-fucking-lutely. In fact, there's probably a very good chance I am, and I feel like I probably am wrong. But Nvidia, they could continue crushing earnings. AI demand could continue exploding. Blackwell could exceed expectations, and the stock could make my short position look incredibly stupid. That's all entirely possible. Actually, I'd say it's probable enough that I'm keeping the position relatively small. But if you're looking for the bear case, I think it comes down to one simple idea. The company is fantastic. The expectations may be impossible, though. And historically, that's where some of the best shorts eventually come from. Not bad ideas, not bad companies, great companies that are priced for perfection. So that's the bear case for Nvidia. And yes, I'm short. And yes, I'm talking my own book. And yes, I fully expect many of you to tell me how incredibly wrong I am in the comments. Honestly, you are probably going to end up being right. But so this is not financial advice. I'm just some dude on YouTube who spends way too much time looking at this shit. And if you enjoyed this video, hit the like button and subscribe. The channel is very new. Totally sucks. I get that. But every comment, every like, every subscriber genuinely helps and will definitely be appreciated down the road. So thank you for watching, and I will see you in the next one.